and my mind just exploded. I immediately understood everything he describing to me, and especially the forced appreciation, which is really the backbone of my business and what I do with all of my long-term rentals, my short-term rentals, and my flips and rehabs. So that one client, that one conversation, that one house 22 years ago is what started this incredible thirst of how does this work? How do I do this? This is so exciting. I want to know everything I can know.
Hello, everyone, and welcome back to the Freedom Blueprint. I'm Adrienne Green, and today we are here with Stacey Duvall, my friend and colleague. Stacey has over 30 years of experience that she is bringing to the table today, and that mixes her roots as a real estate broker and an interior designer, and she really has a passion for real estate investing for herself and for helping others. Stacey, I'm really glad that you joined me today. Thanks for being here.
Thank you so much for having me, Adrienne.
I know you've done so much. I'd love to hear, how did it all start in real estate investing for you, Stacey?
It actually started with a conversation that I had with a client of mine at least 22 years ago. He was an investor and he only invested in C and D areas of town. So I'm showing him houses one day and I'm in an area of town that I've quite honestly had never been to. And I'm walking through this house with him. And keep in mind, this is 22 years ago. The price of this house, the asking price was $19,000. It was in very poor condition, and it was a 2-bedroom shotgun. It had a camelback, and it was unfinished. And so I asked him, what are your plans with this house? And he walked me through the entire process. He was going to finish the upstairs camelback to make a 3rd bedroom. And I don't remember what the rents were at that time, but he was going to get an additional, let's say, $250 a month for that additional 3rd bedroom. And his all-in budget divided by the rent. And my mind just exploded. I immediately understood everything he describing to me, and especially the forced appreciation, which is really the backbone of my business and what I do with all of my long-term rentals, my short-term rentals, and my flips and rehabs. So that one client, that one conversation, that one house 22 years ago is what started this incredible thirst of how does this work? How do I do this? This is so exciting. I want to know everything I can know. And so that's where my journey began.
It's always great to hear about like that little tiny spark that started it all. I feel like that can motivate those of us who are trying to help others like you do, like I do, to see that one conversation that we could have with someone could totally transform their lives. Because that sounds like what this conversation did for you.
It certainly did. The next experience that I had that sparked it even hotter was a broker that I had a cross sale with probably 20 years ago. So not much after the conversation with my investor client. And he's an amazing person. So I invited him out for lunch. I said, I just want to get to know you better. You're so amazing. And during the conversation, I asked him, where do you have most of your money parked? Where do you invest your money? I want to learn from you. What do you do? And I was expecting him to say really sophisticated things like the stock market. And he said, everything I own is real estate. I own laundromats. I own strip malls. I own duplexes. And for the first time, I really grasped the concept of diversifying your portfolio and not just single family. And that conversation, again, really sparked this desire in me to learn this business. So just asking lots of questions of really smart people. That's how I've done it.
What I also heard on that is so often, so many businesses, real estate agents, real estate investors, we see this in all these things. We can see others sometimes as competitors rather than colleagues, right? Especially if they were on the other side of a deal. And I love how you were like, no, we're doing the same thing. Let me learn from you, right? That's awesome.
The spirit of cooperation is really everything. It's the core of everything that I do, because I find that if you just ask questions of other people, they love to talk about what they're good at. And so it's a great way to build relationships with people. And that's really how I got started in this business. And then 30 years ago, I started as an interior designer in a furniture company. And it was so much fun. And I really love interior design. but I got my real estate license about 26 years ago. And showing houses to buyers for the last 26 years, I know exactly what buyers like. I know what they don't like. And most importantly, I know what they will pay more money for. So I always keep that in mind when I buy houses to renovate, whether I'm keeping them as a rental in my portfolio or if I'm selling them as a flip property. I always keep that in mind of buyers will pay more money for this house if I put in granite instead of laminate countertops. And so it's one of the things that I do for all of my rental properties in my portfolio is that no matter what price point or what rent category that house is in, no matter what area of town, all of my kitchens get granite countertops because it's indestructible.
And your point here, to go off on a little bit of a tangent, but I think it's relevant for your expertise. Thinking of flips, let's talk, or just, selling investment properties in general, which, I think investors do most with flips. Let's talk about staging. I'd love to hear your thoughts, your insight on staging when you're selling your investment property.
I love this question so much because not only am I a broker, a investor, a flipper, but I'm also a designer. I wear many different hats in my companies, in my business. Staging is very, very effective, but I don't really stage any of my properties other than basics. Shower curtains, towels in the bathroom, maybe a couple of plants, but I don't do any furniture staging. The reason I don't do that is because my houses are beautiful and they're completely renovated. So everything's brand new. So I don't need to show a buyer how great this house is by placing furniture because it's already a 10 out of 10.
Now, what about those people who've maybe flipped a house and it isn't a 10 out of 10? We've seen those as agents or as investors. You go in to buy a place and you're like, oh, this is a little rough around the edges, right? To put it mildly. Do you think houses that aren't a 10 out of 10 benefit from more robust staging, or what are your thoughts on those situations?
I would advise a beautiful sofa and great artwork is not going to hide sloppy craftsmanship or very, very inexpensive materials. Buyers are way smarter than that. And if buyers are going to buy in this market with the escalated interest rates and escalated prices, they are pickier than ever. So while the staging might make it look beautiful, if he cuts too many corners, staging's not going to help.
That makes sense. Well, let's go back to your journey and continue down the route. So you had these conversations, you had started real estate investing for yourself. What did your investing look like and how did it evolve over time?
I love this question. Like most investors, we started out with hard money loans and buying properties that were lesser expensive just so we could get in. So we have a lot of properties in the C and D areas of town that were a little more affordable to get into, but have really higher cash flow because of Section 8. So we actually have quite a few Section 8 properties that we still own and manage. And that's where most people start because it's a little easier to get into more affordable homes. As we built our portfolio and no longer needed the hard money lenders, we now go through either commercial banks or just Freddie Fannie loans for our financing. And we are in the very early stages of identifying which properties we want to do a 1031 with and reposition those assets into short-term rentals. So again, we just want to diversify a little bit more.
Okay. Well, there's a lot to dive into here. What I'd love to do first is people stress out about the prospect of owning Section 8 rentals. Can you talk about the logistics of, people worry about evictions, they worry about damage. What has your reality been owning Section 8 properties?
This question is so important because as with anything, you can believe whatever you want to believe. You have the choice to design your business the way that it fits your business profile. I have a very interesting and very rock solid way of screening tenants.
Okay.
And all of my tenants, I'm so grateful to say this, all of my tenants are amazing. They pay on time and they call me immediately if something's leaking, because I have a very good screening process and I train them really, really well. So my experience with Section 8 has been very pleasant. Now, let me say, I don't enjoy the process. I don't enjoy the paperwork, and I don't enjoy the inspection process. All of that is very challenging to learn, and it changes all the time. But in terms of
Right.
my tenants, I've only ever had 2 evictions. When my Section 8 tenants move out, well, not even my Section 8, with all of them when they move out, there's a little bit of cleanup to do, but there's no damage to my houses.
So I'm sure people are dying to know what is so special about your screening process.
I don't know that it's special, but it just sort of designed itself over the course of all of these years because I had to go learn property management. As a real estate agent and broker, nobody teaches you how to do property management. And it's one of
Right.
the most important aspects of this business. The first thing I do is they have to fill out the application and upload all requested documents before they tour the property.
Wow.
I show all of my own rentals. I don't have anyone that does that for me because that is also by design. Once they fill out the application, upload their paycheck stubs, their Section 8 voucher documents, and I do all the screening before I show them the property. That sounds really backwards to some people, and I get a little bit of pushback from this from applicants who just keep messaging me, I want to see this home Friday at noon. I bet you would. That's not how this works. And I say to them, I understand that it sounds strange to fill out the application before you even see the home. However, you're welcome to look at all the professional photographs on the listing, and you're welcome to do a drive-by of the neighborhood and the house. That's everything that you need to know. If you're unable to follow these instructions, I completely understand, and I wish you the best of luck on your search. The reason I do that is because I want to make sure that whoever I choose for that property understands that it's my rules. If you want to live in my beautiful home with granite countertops and a brand new HVAC and a brand new roof and brand new windows, this is how my process works. And when I explain that to them, almost all of them fill out the application. So that's the first thing that I do in my business. After I schedule the tour and meet them at the property, I say to them, bring anybody you want to bring to walk through this house and make sure it's the best house for you. Because I want to meet all the people they're close to. Because I want to know who's going to be hanging out at this house. And then the last thing I do is I schedule a visit with them where they live now. I tell them this is the final step in the process because whatever their current house looks like, that's what my house is going to look like in 60 days. And a lot of times I walk in and it smells like bleach and pine saw, and I'm fine with that. If they're cleaning, I like them already. So I do things a little bit differently, I think. And it's been a really successful process.
It definitely gives people some ideas or some different ways to do it. And one of my other questions with the Section 8 that people I think don't consider is, what is your average length of tenancy for Section 8 tenants? Like I found in Chattanooga, Section 8 tenants tend to stay for a long time. You know, they're not moving as much as you might have in like, you know, an A-class rental where people are just saving up to buy a house. What do you find with those tenants, how long they tend to stay at one of your rentals?
That's a challenging question to answer because every family is different. But I do find that almost all of my tenants are consistent, stable, and they don't like to move. And that's actually one of my questions during the screening process is we like to do 3-year leases. I understand 3 years might seem like a long time for you, but we're really looking for someone who wants to really put down roots in this house and stay for a long time. And then I go through our safety and maintenance procedures with them, and I explain to them, we're going to schedule a yearly maintenance and safety walkthrough with you. We're going to replace smoke detectors if needed. We're going to check handrails if needed to make sure they're tight. We're going to check and make sure there's no roof leaks. We're going to make sure this house is good and safe for your family. And so from the very beginning, before they even sign a lease with us, they get the feeling that we're not normal property owners. We're not normal property managers. We're going to make sure this home is really safe and secure for you. So that helps them feel comfortable with signing a longer lease with us. And then, of course, we do yearly conversations when their first year is up, their second year is up. And I ask the question of, you know, the last time I was there, your stove looked like it was getting a little old. What if I replace your stove for you as an anniversary gift? What if I maybe install ceiling fans in your bedrooms? Would that be helpful? Or maybe I saw a couple of window blinds that were damaged. Would you like me to replace those for you?
Okay.
So doing those little extra things make them feel, because there's not many other property managers that are doing those type of things to keep tenants longer. So to answer your question in a very long answer, most of my tenants are probably in year 4 to 6. in their lease.
Are you planning a real estate event, mastermind, or podcast and want a speaker who delivers real, actionable strategies? I teach investors how to run their portfolios like a business without the chaos. Book me for your next event at adriennegreen.com/speaking. And that link is in the show notes as well. That's, I think, definitely longer than average. Now, with the 3-year leases, I have 2 follow-up questions. So the first one is, what is your policy if people decide they want to move prior to the end of the lease? How do you handle that?
I have one of those right now. I have some girls who are roommates and they decided they don't want to be friends anymore. And I rarely take roommates for that very reason, but I took these girls because I felt like they were going to be okay. Well, they're not. They don't want to be friends anymore. So one's already moved out. So I'm having conversations with them now. They've been in that house maybe 9 months. And I'm having conversations with them now to try to figure out what's going to be best for them. The girl that moved out is still paying her share of the rent. She's very responsible and she understands that she's still responsible for that. So for now, it's okay. I've got everybody sort of settled in. But it is a conversation and a decision that I'm going to have to make in the next couple of weeks of, do I let them out of their lease? Do I make them stick out their lease? What are the options? I don't know yet. So I always refer back to my lease, but then I take everything on a case-by-case basis. I had one probably 4 years ago who got a new job in Virginia, and they were amazing tenants, never had any issues, always paid on time. And I said, absolutely. I completely understand. You guys have been so great. I'm going to go ahead and let you out of your lease with no penalties.
Okay.
And they left it in such great condition. I got somebody in there within like 10 days.
Awesome. It's nice when it's a win like that. And my other question about your 3-year leases is, do you build in rent increases or do they pay the same monthly rent for all 3 years?
The rent increase is on page 1 of the lease, and it is done year by year. So there is the date that the lease will renew and the price of the new rent amount. Year 2, date, year 2, rent amount, year 3. So it's on page 1 of the lease.
Awesome. And do you have a typical amount that because that's the challenge is, I feel like for investors, for people who are listening are like, what, who don't have this experience. The challenge is if you keep rent the same for several years, right? Like let's say it's $1,000 a month and these are great tenants and you never raise it. Well, 5 years later, maybe market rent is now, let's say $1,400 a month. It's really tough on people if you raise it from $1,000 to $1,400. So that's where often best practices is, you raise it a little bit each year, even if they're great tenants. It's just a small amount so that you never get too far below market rent, right? That's so for background for listeners. So I'm curious, Stacey, do you have like a certain dollar amount or percentage or ballpark you like to, as you put this in, that you find is a win?
I knew that exact situation would occur. In the rent increase on page 1 of my lease, it states up to 7% a year. So up to 7% can be anywhere between 1 and 7%. So I kind of gauge it based on what else is happening in the market around that property, because I don't want to increase them too much. That would be a financial strain for the family, but I do have to keep up with the increase in property taxes and the increase in homeowners insurance.
Right.
So
yes, that's a good point too.
Vary based on what the market's doing, how much I increase it.
Right. That's nice. So you build in that there's going to be an increase, but you leave it flexible to see how things are going.
And all right. So let's use that as a motivator to get the tenant to stay. If I get any sort of hint that they might be looking, or if they are saying things like, we really need a bigger house or we really need more space, then I have a conversation with them and say, okay, your next rent increase is coming up in 3 months. It's going to go from $1,400 to $1,625. But how about we do this? And to help them continue to stay in the property, I might give them a $75 discount or something to cooperate with them to help get them to stay.
Great insights there for all of our long-term rental listeners out there. Thank you. And I think we've dug a lot into this Section 8 aspect of it and what's come up from there. What I'd like to talk about next is something I think you're probably pretty passionate about. You mentioned your 1031 and converting more to short-term rentals. I'd love to hear about what you're doing with short-term rentals right now.
So we have 4 short-term rentals, and we have 2 that we're getting ready to start construction on. In an effort to diversify our portfolio, we are looking to do some 1031s out of some of our lower performing long-term rentals and do tens into short-term rentals in a couple of different markets. So we are in 3 markets now, and we are in the process of identifying what next market we're going to purchase an STR in. And simultaneously looking at our portfolio of long-term rentals to determine which package of those we're going to sell to move that equity into a short-term rental.
It's an exciting and a busy time to do all of that. So I'd love to hear what's motivating the switch for starters. What's exciting you about short-term rentals right now?
Oh gosh, it is such a fun business. It's so much fun. And it is 4 times, if not more, profitable than a long-term rental. So it's one of the things that we are examining right now is, let's say, for example, I have 5 long-term rentals and they all cash flow $500 a month. And I'm making just round numbers for simplicity. So that's $2,500 a month at those 5 properties net each month. If I sell that package of properties and take the equity out of that, purchase a short-term rental, net profits on a short-term rental could be anywhere from $6,000 to $12,000 a month. Now, it's a lot more work, a lot more maintenance. It is a completely different process of managing those 2 asset classes, but the cash flow is tremendous on short-term rentals. And then, of course, you have other tax benefits, cost segs. There's lots of other ways to maximize the tax assets for short-term rentals.
Right. You've got this long-term rental portfolio, which is great for appreciation and your net worth building. And now you're just balancing it with some more cash flow to get both pieces of that wealth building, right?
Right. Part of our next investigation process of which market we want to be in now is really what markets do we want to go vacation? Which markets do we want to buy a short-term rental so we can go and do our material participation and spend a week there and maintain the property.
I was going to ask why you were choosing to go into a new market rather than, build your more in a market you're already in. It sounds like that might be the answer.
That's a big part of the answer. And then again, we don't want to have too much in just one market or one asset class. We're looking to just diversify. So that's another reason that we're looking in different markets.
Now, I'm curious, people are looking for short-term rentals right now. Sometimes it can be hard. It can be hard to find or challenging to find a short-term rental where the numbers work. If you were, speaking to listeners now who are in that situation, they're like, oh my gosh, I run the numbers on 100 properties and every single one is in the red right now. What advice is somebody who isn't a short-term rental owner, who is looking to buy another right now, what are you liking about, is there certain places, certain types, certain price points? Where are you finding things that might be a win, or what wisdom would you give to those other short-term rental investors?
It's such a great question. It's one of the most common questions that I get from newer investors. And that is, where do I need to buy? Where do I need to go? That question has so many answers depending on what your goals are. And I know that doesn't sound, you're thinking, come on, tell me what I need to know. But it really depends on how much money you have to invest. It depends on what's most important to you about this property. Is it cash flow or tax benefits? Based on those answers that you give, my answer is going to be different. But as a general rule, here's the answer to your question. The first thing you have to do when you identify a market that you might be interested in is find out what the regulations are and if you can even have a short-term rental in that market. That is the number one piece of information that you have to find out. Secondly, you want to look at what the other competitors in that market are doing in terms of price, in terms of design, in terms of amenities. Because if the competition has pickleball courts and in-ground pools and your property doesn't, you're going to have to price it accordingly. And then thirdly, don't overlook the ugly, unperforming properties. As we mentioned earlier in this conversation, I love forced appreciation. And one of my most recent acquisitions was an underperforming STR. And there were many reasons that this property was not doing well financially. And a big part of it is because it had a lot of repairs that had not been taken care of. And the interior design was really, really bad. So the numbers from that seller were not great. So I took that into consideration when I did my analysis on that property. Even the acreage on the listing was wrong. That's for another conversation. But because this property needed so much improvement, we got a pretty good deal on it. And with the redesign of the property that I did, we are booked every weekend through the end of September right now. It's
That's awesome.
Great. And also the previous owner's listing pictures were not good. And that, I don't know how they did anything with this property, but it's performing great now. So my advice is don't overlook the ugly properties.
That's good, because with short-term rentals, that management piece is a big part, and you could come in and be a better manager for sure. Great insight, Stacey.
The management piece was also a big part of that. They had a co-host on the property that was charging them, I think it was 20%. And that is a huge chunk out of your profits. If you need a property manager, then by all means get one. But because I self-manage, I'm able to save that management fee as well.
Right. It is not trivial on short-term rentals, that's for sure.
Mm.
Well, Stacey, we've had a good conversation. It is time for us to do our closing quick-fire questions. Are you ready to roll?
Let's do it.
Okay. So first, what is your go-to tool for managing operations?
Oh gosh, there are a lot of different tools that I use depending on which property I'm working on. I'm a little old school. I still print off calendars and bullet point sheets for all of my subs, and I tape it to the front window of the property on the inside. So every contractor, my plumber, my electrician, my framer, they all have their sheet.
All right.
And then there's one giant calendar on the wall with the photo shoot for that property in bright red. So I always start with the end in mind. So I have the photo shoot on the renovation I'm doing right now. The photo shoot is July 1st. So all of my contractors know the photo shoot is July 1st. And then I have a calendar that says electrician is here these 4 days. Drywaller is here these 4 days. So they know who's going to be in the house with them, because, you know, they love it when I have too many people there at one time. And then that bright red photo shoot day. So that's a little bit of an accountability for all my guys to say, okay, electrician, you were supposed to be here yesterday and you didn't show up. This is going to throw my schedule off. So that is a tool that I use that has been very, very effective. I'm sure there's an app that will do that, but I don't know about it.
Still, that's great to share what you know. And next, what is one piece of advice you would give to your younger self when you were starting out?
Don't believe the limiting beliefs that are rolling around in your head, that this business is too complicated, I don't have enough money, I don't know what I'm doing. Those limiting beliefs kept me on the sidelines for years. And once I finally dove in, bought my first house, started doing renovations, I got a little bit more confidence of, I absolutely love this. This is so much fun. I'm going to figure this out. So my piece of advice I would give to my younger self is believe more in yourself and just do it. Just dive in. Just get started early.
Love it. And then finally, Stacey, what is a book that has been transformational in your investing journey?
Oh gosh, there are so many. Cashflow Quadrant. Kiyosaki was a huge one for me. Huge one. I always tell people start there. That will help spark that entrepreneur spirit in you. If you have just an inkling of entrepreneurship in you, that book will pull it out. All the classics, Think and Grow Rich. There are so many classics that have really been the groundwork for everything that I do that have nothing to do with real estate.
Yes, very true. A lot of things that come in with personal development and other aspects. And then, Stacey, if somebody would like to learn more about what you're doing or connect with you further, what is the best place for them to reach you?
Anyone can find me anywhere. Look me up on Facebook, my website, my mobile. Happy to help with anyone who has any questions about real estate or interior design or renovation. It's one of my favorite things to talk about.
We'll get that stuff in the show notes as well. So thank you so much, Stacey. This has been an amazing conversation. Now, listeners, if you loved today's episode, please take a moment to subscribe wherever you're listening, leave a review, and then share this with another investor. Who do you know who could benefit from hearing Stacey's story? Right now, go grab the link, whatever you got to do, click share and send it over to them. And then join me again next week for another episode of The Freedom Blueprint.